Hey everybody, it's Paul with the Anderson team. I am excited to be joined by Jill Sheldon from Jill Sheldon & Co. Home Loans, our preferred provider. It's January. I'll get this like super date specific because in this world, everything changes. It's January 12th when we're filming this. So you'll probably see this on January 13th, but January 12th, this morning, we've got the Department of Labor saying there's 7% inflation. We've got the stock market like going crazy, like a wild ride. We've got interest rates that I think it's safe to say they're skyrocketing, but still historically low. We'll preface both sides of that. But compared to where we were a year ago. So we decided it's time for another update with Jill. So Jill, we're excited to have you. I'll shut up for a minute. And why don't you just give us like your high level, what the heck is happening and what should we prepare for here in 2022?
Absolutely. Well, the good news is we're all still here. So
Yes.
Yay, Happy New Year. This is something that we all kind of expected and everybody's been talking about since, like November, December, that at the end of 2022, we were going to see interest rates higher, like probably around like the 4% level. What we weren't expecting is for 2022 to come out of the gates and start, kicking us to that 4% much faster. Like you said, we still are at very, very historic lows. So if you go and you look at like a 4-decade like long graph, you'll see like the interest rates, right? We still are way at the bottom. But if you zoom in at like the last 2 years, then you're going to be like, oh man, did I miss the low? But they're still super low. We're in one of the questions I get a lot is, okay, I've heard rates are zooming. What does it look like? Where are rates at now? And they're very fluid because they do change day to day. But roughly like on a 30-year, you're still looking around like mid threes. So we're still in fantastic shape. But for homeowners that are looking whether they want to move up or, maybe downsize and that mortgage rate really is, impactful. Basically 1%, a difference in a 1% rate change on $500,000 borrowed is about $300 a month. So it is like time is money, I guess.
Yeah, that's a big deal. I mean, you can get, you're priced out of a home based off of affordability of my budget or what have you, really simply this year, because we will see that drive from 3 upwards. I know the Fed said they're going to hike a few times this year. We'll see. I don't trust anything they say necessarily. We'll just have to wait and see what happens. But like you said, we've seen it go up quite dramatically in just 12 days. So we want to help our clients make sure to take advantage of what's out there, the low interest rates that are there to help you with those low payments. What about all the news about second homes, all of the stuff that's happening there? I know there's a pretty timely deadline. I'll let you explain it.
Absolutely. So come April, there's going to be some changes in the way that Fannie Mae and Freddie Mac look at second home purchases. Right now, the rate sheet is right along the same as a primary residence. So you really don't pay, any type of a premium for buying a vacation or a second home. Come April, they are going to be pricing them just like they do an investment property for the most part. So if you are thinking about adding to the real estate portfolio, do it before April.
So what does that look like? Can you expand a little bit? So let's say I'm an investor, but I want a second home, maybe an Airbnb, it's $400,000 or $500,000. What does that mean to me, bottom line?
It basically just means you'll still be able to purchase the down payment requirements are still fantastic, but the interest rate's just going to be more like you would see on a rental property purchase.
Okay, so absolutely, definitely a deadline. Here's the deal: Airbnbs, short-term vacation rentals, etc. They are fantastic here in Phoenix. I mean, Scottsdale, Tempe with spring training, Super Bowl's coming back around. You got ASU. There's just so much opportunity. So if you're one of our clients that are investors, or you've been kind of pondering that idea of a vacation rental or a second home anywhere for that matter, there's a good deadline here to kind of think about getting this done before that April 1st interest rate hike over the long term. We can definitely do some math with you and help you figure out what that means. What's your prediction for the rest of the year, Jill? I know you love when I ask you crystal ball questions, so it's probably foggy, but how's it look? What do you think we should be expecting in the mortgage industry?
I would definitely invest in a seatbelt.
Yes.
But I think all of us probably have a really solid seatbelt thus
The
far.
last 2 years,
Less
we pretty learned that. Yeah.
we could make sure it's in good shape. The rates will rise. That, like I said, they've risen much faster than expected. I was just having a conversation with a family that did a cash out refi. They signed on Saturday, and of course locked in about a month ago. And I just, like, for giggles, I'm like, hey, you guys locked it at the perfect time, because if we were to lock it today, it was a good 0.5% difference in that their interest rate, and they were like, holy smokes. So it is a good reminder to, when you feel it might be the right time, even if you're nervous, reach out and just talk to the professionals you trust, because you just you want to be positioned best for what 2022 has to come, which will include higher rates, but again, historic lows.
It still is. I mean, you gotta rewind and go, even what, 24, a little more than 2 years ago, we were still sitting around 4. I remember telling people when it dipped below 4, this is amazing. And I think we were all a little spoiled when it went, sub 3, stuff that we might not ever see again. But there's still clients out there. If you are thinking of refining, if you're still in those high 3s, it's still a good time. And like Jill said, give us a call, give Jill a call. Her contact information is on this, no matter what medium you're seeing this. She'll shoot you straight. That's what we love about Jill. That's why we partner with Jill. She's going to help guide our clients down the best path to make sure that it is in the best interest of your financial success and your financial future. None of us are here to sell you a product that's going to lose you money. We want to help you make wealth and build wealth through your home, investments, Airbnbs, you name it. There's some great opportunities. So any other last words of advice, Jill?
Oh gosh, that's such an open-ended question. I came prepared for like all the nitty-gritty. No, just hug everybody you love and enjoy life and spend time with your kids. And life is short, and have fun while you're while we're all here, right?
Well, you brought it all like serious now. So
Yeah. No, I meant to be like, have fun.
Have fun. It's 2022.
Make memories.
It is going to be a great year nonetheless. No matter what interest rates do, at the end of the day, it's going to be a great year. Let's make it a great year. Let's choose for it to be. We're excited to be partnering with Jill. Like I said, reach out to Jill for any questions mortgage related. If you're curious about investing, finances, what's the home pricing? If you look back a couple days in our social media feed or our email, you'll see my take on what's happening with home prices this year. Definitely an appreciating market, still a time to buy. And if you're a seller, there's just no inventory. So it is a great time to get top dollar for your property if you're looking to sell and upsize, downsize, change it up. We look forward to serving you in 2022. Have a great day, y'all.
Bye.